candles. So I try to discourage beginners from doing that. But let's see how it turned out. Now you see the chart starts to sell off. Now normally you start chasing after this red candle, is it? Or especially when you see a major level here, or you start to take calls thinking it's going to start a reversal. Now this is where you will start making losses because there is still no clear structure. You see large action, you think you're missing out. No, you're never missing out in a large action. There's always a trade to take from here. So when this happens and we see some form of rejection of this yellow level, now don't always be thinking that this is going to be a V-shaped reversal. Sometimes it's wishful thinking and we have to be careful about that. Now we take a look at the 1 minute chart. We are able to identify very quickly a selling channel, a rough selling channel, right? Especially when we started trending below the bottom trend line here, but we met with some rejection of this major level here because there are some buyers off that level. And it's at this point that you see that there is a resistance here. Now we want to see when it breaks the channel, is it forming a bullish structure or a bearish structure? Now bullish structure, especially in early candles, will be where you see a very strong volume spike, especially in the buying, but you don't see that here. But instead you see that there is a very strong resistance level here, and we see a ascending wedge that is forming, right? Buyers have to buy at a higher price each time, but the resistance is holding. Now this is a good bet then that you can take puts with this structure here. You see the structure, you see a clear resistance level here. You set your stop loss right above this level. You time yourself, especially in this green candle, and I took puts on this green candle. When this green candle comes up, you trust these 2 long wicks here to protect this level, and you take puts at this green candle. Why do you want to take puts at this green candle? Because you will counter slippage and you will get a very good fill on your puts. And once this red candle comes in, you are immediately green in your puts, especially when you open the trade. It's a great feeling, right? So sometimes when you identify structure, you can see a clear stop loss. You are able to pull off trades like this, where you can take puts in a green candle with a clear stop loss without worry. And this is great if you have a clear stop loss, because if you're stopped early from your trade, you make minimal losses because the structure just does not hold. So in this case, we saw a bear flag. We had a clear stop loss. I took the puts on the green candle, and once the buyers were drained out, we started a selling channel again. So this is great. So this is just pure price action play right here. So I missed the early selling. So what? These are early candles. There's so much risks here. So don't be fearing of missing out. There will always be another play, especially when we see the selling channel being broken. We want to see whether there is a continuation of the sellers. Now, why do flags happen? Because at major channels, there will always be buyers here. The sellers want to continue the bombardment of selling. They have to drain out the buyers, and this is why we see some form of flagging. So in flagging like this, you want to see whether this flagging is a bearish flag or a bullish flag, and this is just a very clear example of a bearish